Let's get started on the Aussie dollar. And Aussie dollar, this is going to be a little bit more of a lesson than a trading opportunity because the trading opportunity at hand there's something I'm looking at, but it's not great. But I want to walk you guys through a little bit of the analysis that we did last week on Aussie dollar because Jason Grayson and myself, we both took a beautiful textbook double bottom. And here on the 240 time frame, this is my swing trading time frame, it stands out easily, and it's a kind of a no-brainer trade. However, this was actually a trade where there could have been a little bit of a dilemma, especially if you're someone that is a swing trader and a day trader, and more especially if you're someone that doesn't have rules. And this has been a theme over the last month in the live room. We've been speaking with a few traders who don't have a consistent approach to the market. And you guys know me, my whole deal is consistent analysis plus consistent execution equals consistent results, and consistent analysis means you approach the markets in a consistent way. This is my higher time frame. This is what I do in my higher time frame. This is my trading time frame. This is what I look for in my trading time frame. This is my lower time frame. This is when I go to my lower time frame. This is where I enter on my lower time frame. Right? Whether you're trading a 2 time frame kind of portfolio or a 3 time frame setup, you need to have defined what time frames you're using and what you're using each for. We had a few traders that were kind of just all over the place, where it's like, I'm the daily today, but then I go to the 30 minute, but then I go to the 20 minute, and then the 1 minute, right? There's kind of hunting for trades. And because there's no consistent approach, you can get into a lot of trouble doing that. And here in the 4 hour, this was a great opportunity. This is one of those, my mentor used to say this to me all the time: look for the trades where the money basically has left the bag of the market has basically left the bag of money on the street, on the table that says, please take me, I'm free, no repercussions. Because where I'm from, you don't take unmarked bags of money, trust me. But you can see price action that came down to this level a few times, right? We consolidated down here on the daily and here on the 4 hour on Aussie dollar a few times with some long wick candles to the downside. Looks a little bit clearer on the daily. But essentially, we found buying pressure at this level, enough buying pressure and a little bit of the trade talk concerns kind of loosening at the time, driving the Aussie up, breaking the highs of this consolidation and making us look like we're not technically in a bearish rotation, but a similar setup to a bearish rotation. Then everything got reversed and we came all the way back down to retest this level again. And we were originally thinking, hey, trend continuation, if we can smash past this level, this powerful level of support, there's a trend continuation opportunity to the downside. I believe we talked about this in a past Trading Edge video. And then what happened when we got down to this level again? We held for a second time. And you can see here on the 4 hour, if I just delete my VS1s, right, a beautiful double bottom. I mean, this is going to be your textbook symmetrical, and maybe not quite symmetrical because it's one candle on the way down, but this is going to be your textbook double bottom, along with the RSI going oversold, along with bullish divergence on the retest. You got two kind of, I guess, again, not technically tweezer bottoms, but you got two long wicked candles to the downside here. Perfect opportunity. And this was a trade that we took looking for a retest of structure right here. It was, in the most, we never want to brag against the market, and 99% of the trades we take are tough. This was a pain-free one. And you can see it just went, it went straight up to targets. It didn't play around, didn't tease us anymore. It was just an easy trade. And sometimes you need those. However, if we go down to the lower time frame, let's go down to, let's say, an hourly, it's a completely different story, especially if you're, maybe not doing your higher time frame analysis, right? Because on the hourly, if I just go to I'm going to draw my structure level in. The lows of structure on the daily are going to be 66.76, right? So we look at this, say you're looking at this on the hourly. Well, what's different about this setup? What do you guys see here? Again, try not to let hindsight kind of ruin what you're looking at, but what do you see right here? This is a lower low, lower close. A lower low, lower close. And per our rules, if you've taken the courses, obviously, if you've been through one of our workshops, we teach this process called IPDE, identify, predict, decide, execute, where you identify what the market has done. It allows you to predict what the market is likely to do next. Then you decide how you want to get involved, and then you actually execute the trade, right? But you identify that price has put in the lower low, lower close. That allows you to make the prediction that previous structure support has been violated. It has been broken. right? Therefore, you should predict a continuation lower. And instead of looking for, say, a double bottom, you've now, if you're a trend trader, a trend following trader, you're looking for that pullback trade. So you're looking for a price to retest and then looking for a chance to get short. So you can see here, this is a dilemma because on one time frame, you got to hold. On the other time frame, you have a lower low, lower close. If you're someone that doesn't have a consistent approach to the market, you're going to be really inconsistent with how you see things. And sometimes this is going to be a buy, sometimes this is going to be a sell. And you'll wind up in that Mark Douglas boomer buster category of traders where you're kind of in the middle where you're good enough to be good and not lose any money, maybe make a little money, but you're not quite good enough to really make anything substantial from your trading to take it to the next level and really have it be a life-changing type of return. So you got to be consistent in your analysis, guys, right? Pick your higher time frame, pick your trading time frame. If you're someone that uses a lower time frame, pick a lower time frame as well. If you're someone that's going to be a day trader and a swing trader, right? Select which you use for which. Swing trading, I use XYZ. Day trading, I use XYZ. And keep those opinions separate. It's okay to have a different day trading opinion than a swing trading opinion, right? I look at those as two different businesses, right? And that's fine. And this could have been easily a situation where your swing trading analysis says, look for long, support as hold, look for long, support as hold, or held, while your day trading analysis says look for shorts, look for shorts. Now, of course, if you guys have taken the foundation course, you guys know that this is a clear signal of something else, right? We have that break and then we immediately engulf it, right? This is a signal for a false breakout. So that really killed any that would have negated me looking for any shorts anyway. That's what rules are for, right? But I hope this provides a good example of just like the dilemma that some traders can face if you don't have that consistent approach to the market. Now, what's next here on Aussie, and again, this isn't one of the main pairs that's on my radar to share with you guys this week, but we could talk about it anyway, is I am looking to see what happens next at this level. We are at a crucial level of previous structure resistance. Right? You can see this consolidation right here. You can see the market losing momentum. Interestingly enough, we don't have divergence on the RSI, but the slope is decreasing here, which means we're losing momentum as we come into that previous level of resistance. Would not surprise me if we saw some type of relief, which means a bearish move, something like this. And this would put us in play for a potential channel, potential breakout, or a potential head and shoulders pattern, which means you have your left shoulder here, your double head over here. This would be your right shoulder. And then what we would be looking for next is confirmation of the head and shoulders pattern by violating the upper horizontal level of resistance. Now, why I say it's not the greatest opportunity in the world is because, right above our level of resistance here, what do we have? Another level of resistance. And you guys know how I feel about multiple levels of resistance. The one that's further away is always the more important one. So target profits for me in here would be limited. If we're likely to break this level, we're probably going to go straight up to that next level. So really a break of a violation of 68 cent, right? This would be the main level I want to see violated. But if you are someone that trades the head and shoulders pattern in advance, and you guys know we teach 3 ways on how to do it, you can potentially look for opportunities down here, especially if we start to kind of channel a little bit and create like a multiple shoulder. Look for opportunities at the bottom of the channel, right? That's going to allow you to have a very kind of short stop loss. And if you are trading for either the retest of the upper band or the breakout, you're going to have a pretty decent risk reward. So not a grade A opportunity, not usually one I would share with you guys here in the Trading Edge video, but I thought it was a cool lesson just on the importance of multiple or consistent analysis and consistent kind of a consistent path in which time frames you trade, which time frames you look for or you look at, and what you look for on each one. All right, so let's move on to the better pairs that I have on my radar. Let's go over to the real ones are oil. Oil and the DAX are the real main ones on my radar. But let's go to New Zealand dollar first. This is going to be very similar to Aussie dollar, so it kind of flows right into it, right? New Zealand dollar here on the 4-hour, right? Same situation. You can see our VS1 level right there, that big red box. That signifies an important level of resistance, right? We couldn't make it any more clear. That is the point of these tools, guys, to not do the work for you, but to kind of just drag your eyes there. So if for some reason it's an early morning and you just woke up and you don't take my advice and spend 30 minutes doing something else before you check your charts, and you kind of just go to your computer and you miss structure for some reason, you've got a big red stop sign in front of your face saying, hey, look at me, look at me, look at me, look at me. Resistance. So I think it's a great tool for traders, especially for you guys that are newer to identifying structure. But same situation here. So we can look for a potential head and shoulders where price action potentially retraces down here, or a violation of this level, and each would have the same result, and just kind of getting there in a different way, right? The head and shoulders would eventually push down and then violate this level, whereas if we kind of just consolidate it or maybe went straight up, we would still violate that level. Now, still not clear sailing. That's not the perfect opportunity, and as I mentioned earlier, the market will rarely give you perfect opportunities. You do have a little bit of minor structure up here. This minor structure level is, I'm not as concerned with this as the one on the Aussie. And if we can break past these levels, I think there's a good chance we can go to 64 cent and really retest this higher level of consolidation. Now, what would be interesting here is, like, let's say this does play out as a potential head and shoulders, and we put in a symmetrical shoulder. A symmetrical shoulder just means it's equal to the previous one. So once again, we look at our VS1 level and we just kind of just drag this out. This would be a symmetrical right shoulder because it's equal to the left shoulder. If we take a look at what has happened in this level, what do you guys see? What do you guys see, right? We have a pretty decent zone of past price reactions, right? I'm not sure if we can, I don't really care much about looking left. We can look left here even further. We have a little bit right there. But look recently, right? Because recency bias is important. We've double bottomed here, right? We at the bottom of the zone. We've kind of have V reversal at the top of the zone. We've consolidated right back and forth right here in the middle of the zone, and we got past it, and we came back up and we retested the middle of that zone only to get rejected, and then we kind of got up to it again and got rejected right here, and then we pulled back and couldn't get past there, right? This zone has been pretty significant. So if price action were to come down to this level, and obviously you wait for your entry reason no matter what it may be, and if you can get a trading opportunity down here, again, this is that aggressive entry for the head and shoulders pattern. And you can look at this one two ways, right? One, let's say at minimal, you're trading it to a retest of the neckline. I'm just going to stick with a kind of a horizontal neckline here and not really get all trend liney on you because I'm not a really big trend line person. Well, you know what? Let's even say we get trend liney on you, right? And we're looking at an easy conservative target as a retest of the neckline. You're looking at something that's going to look like this. Boom, right? Now, again, if you're using a conservative reason for entry, perhaps dropping to a lower time frame, you can probably find a stop loss that's not going to have you really risking more than this much. And again, these are the type of trades I love because I don't like to risk a lot, guys. I just saw a cool tweet by Peter Brandt, who's a trader I look up to in the industry. He actually reached out to me recently, and I got all giddy and excited because it's funny the position that I'm in, guys. I know many of you guys look up to me as like this trading coach, and I've been doing this for 12 years and coaching for like 7, so I understand it. But for me, I'm still a student. I always look at myself as a student. I'm always looking to learn, and when I got into the game before even after I found my mentor. There were people in the industry I looked up to. There are people like your Mike Bellafiore's and your Brett Steenbargers and your Peter Brandts, and I'm talking about the people that I see actively out there. Mark Douglas would be one, but Mark Douglas wasn't on social media and stuff like that. So it's kind of cool to work your way up from a point where you're idolizing these people, and I still do, to actually kind of being in the conversation where they mention your name and you get respect, where you can have conversations with Mike Bellafiore and he knows who you are, and same thing with Dr. Brett Steenbarger and Peter Brandt. It's I'm still like a fanboy, which I guess is kind of cool. But he put out something today. Let me just check my Twitter. And while I'm here, I should shamelessly promote my Twitter. Follow me on Twitter, guys, if you don't already. He said, a great technical analyst cannot always be a good trader. A good trader is always a good risk manager. It is what makes him or her a good trader. Trading and analysis are two different skill sets. A tiny percentage of traders possess both capabilities. What do you guys think about this? Yay? Nay? Do you agree? And essentially, if I can dumb it down some, he's saying that just because you can analyze the market doesn't make you a good trader, right? And that is 100% true. And you know how I know this, right? We talk about it all the time. What do I say? Most traders don't have a problem finding good trades. And I cited some studies that proved it. Most traders don't have a problem finding good trades. So again, that's just not dumb luck. If it was just dumb luck, everyone would be 50% if it was random. But it means that in general, traders are good at technical analysis. And I think I think technical analysis is the easiest part of trading. Not saying it's easy by any means, but it's the easiest part of trading because it's a skill. And like any skill, it could be taught, it could be learned, it could be developed, right? That's what skills are. You practice or you are taught a skill, you commit to learning it, you commit to practicing it and doing it the right way, and you get better at it, right? That's how it works. So I think anyone of just an average or even below average level of intelligence can pick up on something like that, pick up on concepts, especially if you make it rules based like how we teach. However, trading psychology is a whole different story. Psychology is a much harder hurdle to clear, not just in trading, but in life. Right? Think about how many people you know out there that have all these dreams and they want to do something but never pursue it because they're scared. That's psychology. Right? So, and I kind of put risk management under that because typically many of the mistakes in risk management come from trading psychology lapses, such as, you have stops that are too tight because you're scared, or stops that are too far because you're scared, or you take targets early and you don't let your profits kind of run the way they should be, so you sabotage yourself, right? That's all risk management type of stuff. Putting yourself in the best position to profit, but by risking a little bit amount. That's all trading psychology. So I think there certainly is a difference. I think you could be a very good technical analyst, but not possess the kind of psychological skills and determination to manage risk the correct way. You see a lot of traders that make a lot of money really, really quick, 100% returns, and they blow 200% the next day, right? That's risk management. And then I think there are some people that are, probably to a lesser extent, that are very good psychologically, but just maybe they just don't possess the skill of knowing how to read a price chart. So I agree 100% with him, and that's why a very small margin of traders are successful, because you need both, right? You need both. It's like a good NBA player. You got to be able to shoot the ball and score. You also got to be able to play defense in most cases. So that's interesting. But anyway, I like these type of trades because you can get a very good risk reward here. I mean, look, this little red margin represents what my risk would be. This green level represents what my reward would be. I mean, it doesn't get any better than that. Even if you're taking a more conservative approach here, again, you're getting below the head. This is kind of the last. If price goes below the head, there's no head and shoulders pattern. If there's no head and shoulders pattern, you shouldn't be in the trade. That kind of tells you everything you need to know. All right, so even getting a stop loss beyond the head here, you can still set yourself up with maybe a 1-to-1 target one with that conservative, or 1-to-1 risk reward, with that conservative target. So I think it's an interesting situation to keep an eye on very early. This is something that could be weeks away, but definitely keep your eye on it. All right, and those are supposed to be the boring pairs. Let's head over to the other two. Let's go over to oil next.